Let me kickstart the discussion with Swami. Swami, whom should the budget really address? Should the budget address voters, foreign institutional investors, or rating agencies?
I think Mr. Chidambaram says first and foremost, he has to worry about being re-elected. Within that, he has to worry about the Aam Aadmi. But the Aam Aadmi's biggest single issue right now, I think, is inflation. And if you want to check inflation, actually you have to look at the credit rating agency. If the credit rating agencies downgrade India, money will flow out of India, the rupee will crash from 55 rupees to 60 to the dollar, all import prices will go up, inflation will go up to 15%. Then the Aam Aadmi will be very unhappy and he will lose the election. So I said there is a complete alignment right now of the interests of the Aam Aadmi and the credit rating agencies. So that is where Chidambaram is going to go.
Rhythm, hi, morning. Want to get you in as well on the discussion because you have a pulse of the FIIs. What is it that the market is expecting from the budget this time around?
I think the finance minister has already given us the guidance on the fiscal front, which is he's likely to meet his deficit target for F13, which certainly is a big surprise from where we were, say, 4-5 months ago. But he's already given us that guidance, so I guess we should be looking at a number of 5.3 or slightly lower. And then he's also given us guidance for next year, which is that it's not going to be more than 4.8. So I guess we'll be looking for a number which is sub 4.8. This is a great setup. This is exactly what the economy needs, lower fiscal deficit and more restrained by the government. I think what the market will be interested is to see how the numbers add up, what has happened to expenditure growth and how the numbers have been achieved. And if the numbers are clean and it's been arrived at by some major expenditure curtailment and no major off-balance sheet problems, then I think the markets will like the number.
Arvind, your skin is in the game. You are a foreign institutional investor. You have a large exposure to Indian equities. So what is the view in Washington? Do you expect this year's budget will be market friendly and it will stroke growth?
I certainly hope and expect a market friendly budget, partly because the finance minister has been so proactively going out and visiting investors and I guess more or less promising both fiscal discipline and generally market-friendly budget. So I think given how much the government itself has made a big deal of this time's budget and the kind of overall broad outline of things we can expect, that I certainly both expect and hope that we will get a market-friendly budget.
Bala, hi, morning. Want to get you in as well on the discussion. Could today be a game changer for the markets?
Yeah, I think clearly the effort that has been put in the last few months, and even the economic survey clearly points out the various activities that need to be undertaken, given the fact that the fiscal need to get consolidated. At the same time, you cannot increase the tax revenue substantially, and also ensure that the compliance rates, especially for tax collections, go up significantly. And then the other focus area has been how do you manage your fiscal numbers to ensure that the S&P does not downgrade the rating. It's one, of course, the expenditure control, which includes subsidies reductions. I think there has been effort, which in my view will be put in actually in the budget, to see to it that whatever the spending that is being planned is more towards increasing the productivity and increasing more jobs through certain sectors which has the huge potential to create the jobs as well as increase the revenue. And on top of it, one need to also have very strong capital market, which is more related to the certain provisions which are more directly linked to the capital gain tax, etc. In our view, may also get addressed in the budget. The last, of course, not the least, the large pool of savings of Indian investors have to get channelized into the productive assets, has to get channelized into assets which are not does not create any economic value, such as discouraging investing in gold and real estate, and more money being channelized into the capital market assets, either in the form of a debt or in the form of an equity. And also, our belief is will get addressed in the budget today.
Rhythm, this question is coming your way, and there is a view on the street that FM may take measures to curb expenditure. How negative is that? Because economic growth is not that strong. If the finance minister indeed decides to curb expenditure, that automatically will have an impact on near-term demand and growth.
I think the markets will like the fact that the fiscal deficit is going up. There's certainly some challenges in transitioning the economy from a high fiscal deficit to a low fiscal deficit, growth challenge. It certainly comes in. I think the way we are trying to address that is by lifting public sector enterprise expenditure. So there'll be some offset from there, but there will be a little bit of an impact on growth, I think. It cannot be done without any impact, so that will happen.
Arvind, we just heard Rhythm talk about the need for fiscal discipline. The finance minister has already set a fiscal deficit target of 4.8% for the next fiscal, but this could be largely met by expenditure cuts. Do you believe fiscal tightening could come at the cost of growth?
Well, I think two things on that 4.8 number. I think there's a lot, like any number, any politician or any government promises all over the world, there's always some smoke and mirrors involved. So I think even that 4.8% number is always going to include some subsidies not taken this year, taken next year, what have you. But, you know, leaving all the quibbling aside about the exact number, but for the deficit itself to be coming down by, you know, let's say 0.5% or more, versus FY 13 going into FY 14 would be a positive accomplishment, and if it can be done with some expenditure reductions, some more discipline on the part of the government, I think it would be it would be seen positive. Also, I assume the part of it would be more asset sales in terms of disinvestment program continuing. And therefore, that would also help in bringing budget numbers down.
Swami, the one thing that is going to put pressure on the fisc is the food security bill. Even the economic survey has raised the red flag yesterday. What is your view on the same?
My views? No, the food security bill is a political gimmick, frankly. And it's a political gimmick that's not going to work. For instance, the central government says, I will supply rice at 3 rupees a kilo. Okay, but many southern states like Tamil Nadu, Kerala, Andhra are already supplying rice at 1 rupee. Chhattisgarh is supplying at 1 rupee. So you will end up not by somehow benefiting voters. You are merely subsidizing Jayalalitha and Kiran Reddy and Raman Singh and various other chief ministers. So a lot of that impact is lost. Where you may have, even in the case of wheat, there is already a cheap atta subsidized program in Punjab and UP. So again, it will be the central government subsidizing the state governments. In some parts of India, there may in fact be a completely new thing. But the general impression, the internal calculations of the government are that the food subsidy will go up from about 70,000 to maybe 100,000. That is something which can definitely be afforded.
Pala, I've been asking this question to everyone, and I've got different, response to this one. And my question is that what, to your mind, could be the big idea from this year's budget?
I think the big idea, which I think is, I would assume that more the channelizing the large pool of savings into the capital market-related assets. Again, is coming from the fact that what we are currently struggling with respect to the current account deficit, which is a combination of both the import of gold and the crude oil. And it's also known fact that the large pool of the pressure is coming on account of the gold as an asset, which is the householding savings is going up significantly. And I would assume that this budget, if at all one has to think about something the path-breaking, something which is innovative, may not be from global point of view, definitely from Indian investors' point of view, could be in the nature of introducing some instruments more to channelize the public savings into the capital market. I'm also assuming that there has been a pending reforms with respect to the pensions, especially in the lines of what we have seen actually in the global market, both in US and Europe. There has been a serious amount of debate. There has been enough number of representation that has gone from the mutual fund space as well as in the other financial intermediaries to see to it that create actually a large pool of pension funds in the country, which could get channelized into the capital market, both in servicing debt as well as on equity. I would assume that given the fact that the large participation is needed if one has to actually meet the divestment target as we move forward, mainly to manage the fiscal, we need to have some kind of path-breaking ideas to mainly develop the capital market, both in the bond as well as in equity. So I would assume that there will be something which is unique, something we've not seen actually for many years, could come in the budget today.
Okay, Rhythm, do you think the onus should be on reviving the investment cycle more than anything else?
Oh yeah, certainly. I mean, I think that's what the focus is. But it will take time for the investment cycle to come back. I mean, I don't expect confidence to be revived overnight. It's a very complicated issue. Return on equity is at low levels. Cost of capital is still high. The spread between ROE and cost of capital is what drives investments, and that's not still favorable. Then we have an election cycle sometime next year, which again will be some consideration for the companies to make. So I think a private investment cycle will come by rather slowly and will take 12 to 15 months to evolve. It's not going to come back so quickly. But if we have put a floor on the investment cycle, which is what I think we have, that's a great achievement, because it seemed to be in a free fall last year, and it certainly now stopped falling, which in itself I think is good for the economy.
Arvind, the bad news is that of late union budget has been more like a no event. But given the kind of environment we are in, the fact that we are staring at a strong slowdown both in consumption and investment cycle, do you think this year's budget could be more like a make or break event?
Absolutely. That plus what we talked about the finance minister. So, let's look at the backdrop of where India is today. Growth has now slowed down dramatically to 5%. And I think, industrial production and other measures don't show any signs that growth is about to, come roaring back. So I think at this point, we need something to re-engage the growth dynamic. And clearly, the biggest challenge is, both business and consumers are feeling the pinch of the slowdown. And I think, part of the issue is either we can allow time for things to get better, or the government needs to, provide some spark to help revive the economy. And so, therefore, the budget becomes important in a period where, the bottom-up forces don't seem to be, as strong or as powerful to be able to get the Indian economy out of the current slump it's in.